Welcome to the piggybankadvisor.com show, a show that speaks to your personal finances but also helps you onboard trading platforms such as your C-Trade and INFX. So really, Piggy, as you know, believes that the time is stock o'clock, meaning that it's a great time to start buying or building positions in shares, especially on the Zimbabwe Stock Exchange and even the Financial Securities Exchange, FinSec. So really one of the key topics that's crucial is for you to be able to select shares to buy, which is basically known as stock picking. So really we've been talking of some of the metrics that you can use in terms of picking shares. Last time we were talking about the price earnings ratio, which is basically your price versus your earnings per share. Today, of course, we want to look at another interesting one called, which is basically the inverse of the PE ratio. So in terms of the formula there that we've put out, is earnings yield is equals to earnings per share divided by the current share price. So basically this is the percentage of how much a company earned per share versus, of course, its market price. So basically it's usually expressed as a percentage, which means that the general rule is that you should invest in a company with a high value, earnings yield. So even when you're comparing company A and company B, for example, if company A has earnings yield of 10% and company B has earnings of 15%, which means that you should actually buy into company B because that's where you are yielding in terms of earnings there. But the earnings yield is quite exciting in the sense that it can then be used to probably compare asset classes. So you could calculate the earnings yield for the entire market index, such as the ZSE All Share Index. Say, for example, you find that the earnings yield for all the stocks on the Zimbabwe Stock Exchange is 12%. And then you compare that with fixed income instruments, such as a treasury bill or a bond that's yielding 15%, which means that the market is not really giving investors a good rate of return, which means that it's better off buying a treasury bill than investing on the stock market. So really, generally, the expectation is that investors on a stock market should actually earn more because of the risk. So there's need for a premium, a risk premium that should be placed on the stock market, simply because they're investing in companies and they're not investing in a risk-free instrument such as a treasury bill. So it's quite important that you should also consider earnings yield and compare it with risk-free instruments such as your treasury bill. For example, currently what risk-free rate is well below some of the earnings yield that's being offered by shares on the Zimbabwe Stock Exchange. That is why basically it's quite important really to start buying and accumulating shares on the ZSE. So as you know, Piggy has been running with what are called Piggy investment clubs. These are quite interesting in the sense that you can come together with your colleagues, friends, just depending on whatever social circles that you have, and then you pull together funds, and then you form what is called an investment club. So the main issue you form that is that you could then invite Piggy or the administrator on the number 0783584745 to come in as the administrator and help you then set up the club and then buy shares using the C-Trade platform. The beauty about technology is that you can now make use of USSD, you can make use of online platforms and even app technology really to pull funds and start buying shares. So the main initiative it operates is that you then decide on a minimum amount that you want to contribute, whether it's recurring or it's once off, and then you then build a fund over time. It's quite important given that it can be used as an avenue to save for things such as holidays. You could use it as a retirement tool, but just as a way of really improving your trading skills, and also sharing some of the insights, information that come through by being part of a club. So that was all for today. Please make use of the blog. We've put out the article on earnings yield and other metrics, and we're also running a podcast called What is Piggy Saying, which basically talks to the stock markets, the economics of the day. It's a daily show. You could also subscribe to the podcast also on Google Podcasts, so that you just have the notifications on a daily basis. Otherwise, let's stay tuned, let's plug in, let's work together and get started on the market. So that was all for today, and yeah, enjoy.